Existing home sales disappointed in January. But is a chilly start to the year a sign of what's ahead? I'm Danielle Hale, Chief Economist at Realtor.com, to discuss the good, the bad, and what it means for you in this week's housing and economic data. We saw two key macroeconomic indicators this week: the jobs report and inflation measured by the Consumer Price Index. In the January jobs data, we saw a revision that brought the average payroll job growth in 2025 to just 15,000 per month, down from nearly 50,000. The sizable downward revision was widely expected, so while large, it wasn't a shock. More surprising was the improvement, the drop in unemployment from last month, as employers added 130,000 jobs, nearly 9 times as many as a typical month in 2025. Average hourly earnings also rose, roughly in line with last month. On net, the jobs report was one of the week's relatively good signals. Meanwhile, inflation improved in January for both overall and core measures. Although still above target, core inflation is at its lowest level since March 2021. Taken together, neither the jobs nor inflation data was enough to shift market expectations that the Fed will leave its policy rate unchanged in March. But it's encouraging to see both of these key indicators moving in the desired direction. Mirroring the steadiness in monetary expectations, mortgage rates were once again quite steady, ticking down 2 basis points and notching a 7th straight week in the narrow range just above 6%. This bodes well for the upcoming spring buying season and both home buyers and sellers. However, it's worth noting that recent housing data has been a mixed bag at best. January existing home sales were outright disappointing, dropping from both the prior month and prior year to a 16-month low. Severe winter weather undoubtedly played a strong role, but the weakness was spread across all 4 regions, and December pending home sales were also relatively weak, so it's not just the weather. Home sales are backward-looking, however, and there are still some reasons for optimism, including those steady mortgage rates. Put simply, I haven't given up on 2026 housing just yet. Looking at Realtor.com weekly housing data, we see some improvement from last week's snow-battered new listings trend, but they still lagged the prior year, suggesting a slow start for sellers. This hampered overall listings growth, which also slowed. Interestingly, asking prices remain relatively soft, and this theme carries through 2 additional reports this week. According to the latest New Construction Insights report, the listing prices of both new and existing homes were relatively steady in the 4th quarter of 2025. Additionally, the report showed that nearly 1 in 5 new homes cut prices, more than in the resale market, for the first time since we've been tracking data. This is not just a reflection of price weakness in the West and South, where many new homes are built. It suggests that builders are competing more directly on price in many markets to keep sales moving, even as the median asking price itself remains relatively stable. The January Luxury Trends report showed that the high-end market began the year on slightly softer footing rather than a bang as well, with luxury prices trending slightly lower. The report also compares old and new luxury markets, finding legacy homes on the coasts skew smaller, while newer luxury markets, many in the South, offer buyers more space for the money. Finally, the January Hottest Markets report found that Kenosha, Wisconsin earned the top spot, with the typical home in Kenosha seeing strong demand, more than 3 times the page views of the typical home nationwide. Among the 40 largest markets, fellow Midwesterner Kansas City saw the biggest jump in the last year, suggesting that real estate markets remain relatively more competitive for buyers in the Midwest than in many other areas. You can find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates and Instagram for graphics.